Hello guys, welcome back again to my YouTube channel. This is the YouTube channel of Pips Institute and my name is Joseph. So guys, I welcome you to today's video. It's going to be a very short one like that. And today we'll be looking at the secret of the secret strategy of trading breaker block. So the secret strategy of trading broker block. Most of you that are SMC traders, you must have heard about broker block. So in this video, I'll be showing you how you can properly trade your broker block. What is a trader a breaker block, the strategy behind the breaker block. Most of you do not know the difference between a breaker block. I mean, you don't know what a breaker block really is. So today I'll be showing you that video. So let's before we go into the charts, let us just take a look at what a breaker block really is. Okay. In So let's assume that the market moves this way, then comes back, then the market comes back down, then moves back up, then comes back down, then moves back up, then move down. So so most of you would say that okay, this is just a normal chart, right? Just a normal chart, right? And then you did not see any difference in it. Actually, the the there's a quite some there are quite some difference in this chart. If you look at them properly, let me just highlight this zone for you so you can see it properly. So now guys, please, I want you to pay attention to this. Look up, look at this movement as the market was moving here upward, downward. Then we expect that as market move up a bit, it then came back down and broke this level. So on coming down to retest this level, this same level, which now becomes a breaker block, then it comes, we expect it to retest this level, then comes back down. Okay, you can see that in a breaker block, a breaker block, the second leg of the hem, is this like an hem? The second leg of the hem is actually higher than the first leg. Okay, if you are to use your divergence, this is going to be like a 3-year divergence. That is, you will go, this is showing an higher high, while the divergence will be showing a lower low. So this is the second leg over right here is actually higher than the first leg. So this was not a failure swing. This leg was not a failure swing. Actually, it broke this level. So in other words, we can say that this actually is a form of liquidity grabbing. That is, the market makers, what they did was that they moved up higher to grab some liquidity, just to fake some people out, just to stomp on their stop losses and trigger some pending orders. So that is the reason why they had to push this second leg higher than the first leg. Are you with me? So once they push the second leg higher than the first leg, they were able to hit some stop losses that has been placed above this level, okay? Because the market maker knows exactly where we set our stop losses. So they know that okay, you most of you have gone ahead to want to keep on buying. If you bought around this level, they would have hit your stop loss. And if you should say that you want to sell, you set your stop loss. So they again went ahead and broke and hit your stop loss. So is this second leg is like a stop on. Are you with me? It's like a stop on a stop on leg. So to take some people out of the trader and to use some people stop losses. So it was a higher it was higher than the first leg. So you want so this is a bearish breaker block. And once the market then comes down and then break this level, because this level over here there's a bullish there's a bearish order block over here that was responsible for the push up over here. So, and this bearish level this bearish order block that was responsible for the push up over here, you understand, is another block. But immediately we have this high breaking above this second leg high, then we expect the market to come back probably at this level, then puts the market up continuously. But rather, obviously, was that the market came back and broke this structure, this other block, this bullish other block over here. Then immediately it breaks it. Then we call it a breaker block. Then the market comes back and retest the breaker block. It is no longer a bullish other block. It becomes a bullish breaker block. Then it tests it over here. Then we sell. So and if you want to sell, you are going to set your take profit at around either at the high of the bullish order block. You can set your stop loss at the high of this or at the high of this place, depending on your risk appetite. I'm just giving you ways that you can set your stop losses. It all depends on you. So the second type of other breaker block is the bullish breaker block. This is a bearish breaker block because it broke downward. So it's a bearish bullish breaker block. Now let's assume the market is giving us something like this. Then we have something, a push up. Then we have a push down on this level. Then we have a push up this level. Then we have a push down this level. Then we have a push up. So as you can see, right here we have our other block, a bearish that block that was responsible. So we have a bearish other block that was responsible for this push down right at this level, this other block over here. So once we're responsible for this push down over here, as you can see, then we have a break of this other block. Then you can see that this second leg was lower than the first leg. Then we have a break of this other block. Then coming back to the test, it becomes a breaker block, no longer a bearish other block. So then we have then putting it down, testing it, it becomes a bullish breaker block. Then we have, so your stop loss should either be at below this bullish breaker block, or it should be below this candle over here. So you can set your stop loss at around this, at below this second leg of the hem, or at this first leg of this hem. So depending on what you really want to, where you really want to set your stop loss. So that's it, guys. Let me edit this. Okay. So let's go to the charts to look at for a typical example of what a a breaker block really implies. So you can see how to incorporate it in the charts. So let's go to actually you can find this in any time frame you so desire. There's no there's no rule that says you must use this time frame or that time frame. You can just use any time frame you like, and then you would actually see it on any time frame, and then you can trade it on any time frame. Okay, so let me look for gold. I think I saw one on gold. So good. Okay, yes, yes, folks. This is good on the 15-minute time frame. Let me pick up my drawing tool so we can get it. Now the market was moving this way, right? So we have a push up, then we have a push down. Can you see that this, then we have another push up, then we have a push down, then we have a push up. So can, can you see that this, actually this was a, let me bring out my drawing tool so you can check it out right here. Okay, let's see if, because this was a push down. Okay, this this did not play out as we anticipated it to play out. The market did not come back to retest this fully, so we cannot say that this is a breaker block. So we need to look for a good example of a breaker block. Yes, this is an example of a breaker block. This right here, you can see one clearly over here. Uh, see it right here. This is an example of a bearish breaker block. We have a push up right here. We have a push up right here, then a push down, a push up right here, then a push down, then we have another push up. As you can see, then we have something like this, right? So that means, so that is it broke this structure, this bullish, this bullish candlestick. I mean bearish order block that was here. It broke it, simplifying a change of character. For those of you that knows what the change of character means, if you don't know what the change of character means, you can check my video. So it's actually broke this structure over here. This which signifies a what? A change of character. Then we already know that we are in a bearish phase, that the market has moved from a bullish to a bearish phase. Then the next thing we wait for is that the market should test this level over here. The market did what we expected it to do. So you can see it came back and retested it. If I should draw it, let me clear all this. Now let me draw the rectangular box so you can see how it's actually laid out as we anticipated it to. So can you see that it's actually played out? So the rectangular box, this is the other block. This is the other block that was responsible. This bullish block over here was the one responsible for this push up. Excuse me. I need to zoom it out so you can see the other block. This was the other block right here. This bullish other block right here that you see. So that's the other block that was responsible for the push up, because it was a last bullish other block. So it was one responsible for the push up to this level. Then we have it coming back down here, break of structure, I mean change of character. Then we have a kind of retest back to this other block, this browser block. Then you want to what? You want to sell. So now I'm going to say them something, please. It is not necessary that it's it have to. meets, it has to come back and it has to hit the breaker block to the highest top. You just need it to be around that area. So even if it hit the tip, you can take your trade from this level, sell from this level, then you can decide to set your stop loss at the top of this other block, this bullish other block over here. So your stop loss can be around this level. So can you see you how little you risk? Then you can look at taking it to this level, and then you'll be in profit. And that's it. So that's it on breaker block and another block. So I hope you've had value in this. You can go to the chart and look for examples. There are tons of examples of of other blocks and I mean of breaker blocks. There are lots of them that you can actually make use of. So it is not just just something that is so scarce. It is not scarce. It is something you can easily see in your chart. You can easily see in your chart. Guys, so just you just need to search for it. So when you see it, just be patient. You can look for it on the higher time frame, not necessarily to be on the lower time frame, because even when you go to the higher time frame, you're going to get it even you'll be getting more pips from the trade. So just be patient. Let it come back to 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 the breaker block. Then you are going to enter your trades, and I'm telling you, you're going to make some money out of this simple stupid strategy of trading breaker block. And I hope you've gotten value from this video. If you know you like this video, kindly give me a thumbs up and make sure you subscribe to my YouTube channel if you've not yet subscribed. Please do what to subscribe and turn on the notification bell so that you can get notified each time I upload new content as this. Until I come your way next time, have a great trading day ahead of you today. Bye bye.